Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
Huh.
People who know BDO.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. The housing market and the recovery, how strong are they? And what does it mean for the markets and your money? In such a low interest rate environment, what are your plans for that money? The cash on the balance sheet, fracking, and energy independence. We'll get into it all with the chairman and CEO of Chevron. What may happen to the price of oil and gasoline next. Plus, is it a prescription to make healthcare better using high tech to help you find and talk to a doctor when you need one? How a different kind of Sherpa can guide you when you need help.
People call me the doctor of the future.
On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
I'm Bill Griffith. Maria will be along in just a few minutes with the rest of the program. But first, a look at what's making news as we head into a new week on the money. The U.S. economy grew at a slightly faster pace for the final quarter of last year than previously thought. The final read on the gross domestic product, the broadest measure of the overall size and strength of the economy, rose at an annual pace of 0.4%. Of course, still a weak number, but better than the previous estimate of just 0.1%. Business investments and exports were better than first reported. The markets flirted with new highs during the holiday-shortened week. On Tuesday, the Dow was up triple digits. On Thursday, the S&P finally hit a new all-time high. Long lines as Cyprus reopened its banks on Thursday. The tiny island nation with a huge banking system allowed depositors to withdraw cash for the first time in a week, but there was a limit of 300 euros per person per day, all part of a bailout plan to rescue Cypriot banks. Meanwhile, Boeing's Dreamliner completed a successful test flight as the company hopes it has overcome finally those heating problems with its lithium-ion batteries. Boeing needs permission to resume flights from the FAA, and there are reports it may face another challenge, namely a temporary ban on some long-distance flights. One airline CEO says he has full confidence in the Dreamliner, but he is concerned about something else, the impact of the sequester.
We get concerned about, when we start to hear about reductions in TSA agents. That would certainly have an impact. Reduction in customs agents, that would have a big impact. Anything that makes lines longer for our customers, we're certainly don't want to see.
Elsewhere, T-Mobile is changing its business model. The wireless phone company says it will stop subsidizing cell phones and that customers will either have to buy cell phones at full price, pay in installments, or bring their own phone. Typically, phone companies offer subsidized phones at a substantial discount when a customer signs that 2-year contract. So the markets are watching a tiny island in the Mediterranean, but investors are still hoping for big returns here in the United States. Which is likely to win out here? Joining me right now, Joe Lavorgna, Chief U.S. Economist at Deutsche Bank, and Nathan Bachrach, the Financial Group CEO. Gentlemen, welcome. Thank you for joining us here on The Money. What do you think, Nathan? We see the markets reaching or touching new highs almost on a daily basis during this first quarter. How much room do you think there is to run to the upside still?
Well, there is some room to the upside. It's all going to be dependent on the retail investor and whether or not the $900 billion, Bill, that is still sitting in checking and savings accounts, if that stuff starts to move, that could be the power that could really drive the market further, as long as we don't have disturbances in the force. That would be Europe.
Exactly. And Joe, here in this country, housing seems to be a primary driver of our recovery, even though the data are mixed. Now, let's take a listen to what David Blitzer of Standard & Poor's had to say about that.
Overall, we're now about 9% above the lows for the 20-city composite. We beat the consensus forecast, which was be a touch under 8%. We're at 8.1% over the last 12 months. So across all 20 cities, and really across housing, given a lot of the other economic data, we seem to be cranking on all cylinders.
Do you agree? Is housing cranking on all cylinders right now?
Yes, Bill. In fact, I would actually look at the CoreLogic home price data. it's a little bit more timely than the S&P data, it actually shows more price appreciation. And CoreLogic also told us this week that home inventories are down in absolute terms almost 20% from a year ago. So I think, yes, housing is definitely firing on all cylinders. Total economy-wide spending is worth about 20% of GDP. On average, it's only been about 17%. So the housing sector really can provide us with a tremendous lift this year and next and keep us largely immune, I think, from what's happening overseas.
All right, so we know what's right now, Nathan. What could get in the way of the market, though? It's largely been ignoring the latest European issues, the banking crisis in Cyprus. Right. Are there roadblocks that people are not thinking about right now?
Well, I think there's a couple of roadblocks. One thing that's not being talked about at all is that China at some point has to figure out how to support their middle class. When you've got 85 billionaires inside of your governing body, that probably tells you that wealth distribution isn't going along too well. If they don't get the middle class there, I think they're going to have some real challenges over in China. Now, in Europe, I think they're working off of a philosophy, I'll call it amend, pretend, and extend. They're pushing everything out. They're trying to ignore everything. And on the one hand, a retail investor might say, well, gee, I'm really concerned. Well, on the other hand, we've seen this book before. We've got the videotape. We've got the T-shirt. And it's 2008, 2009. I think Europe's going to continue to do whatever Europe needs to do in order to keep their corporations making money and their economy stumbling forward.
Joe, how do you think Cyprus ends? And how much attention should we be paying to it, you think?
It certainly is worth paying attention to, as perhaps it causes investor confidence to get further shaken. So it definitely is a risk longer term, especially if there are other more important or larger economies, rather, that have further disturbances. But if we look back at the U.S. market and see how the stock market's performing, importantly, Bill, see how credit spreads are performing, and also the economic data being better than average, it does look like, and I shudder as I say this word, it does look like the U.S. is decoupling from Europe. So as long as the ECB effectively is the backstop they've been, I think Europe can continue to muddle along, eventually come out of its recession, but the U.S. will remain relatively immune because a lot of the growth in the U.S. we expect to be domestic driven.
Nathan, we're heading into the second quarter after a stellar first quarter for the markets. What are you telling your clients to invest in right now?
Well, I like large cap growth. When I took a look at Con Edison, which gives you electricity to power your set, and they're selling at 16 times earnings, and I take a look over at some very large multinational corporations here that are selling as a group, large cap growth, selling it at a group at about a 25% discount to its traditional PE ratio. I say one of the first things an investor can do to improve their portfolio without putting more money in stocks would be to move some money over. If they've made money in small caps, if they've made money in mid caps, move it over to large cap growth. That's what I would do on the stock side. And on the bond side, I would shorten up my duration, which is the amount of hurt you're going to get if interest rates go up. The ag is somewhere in the 5s. I go towards 5 and maybe even to a 4.5 to 5% duration on my bond portfolio right now, so that a rise in interest rates can't hurt my bond portfolio.
Very good. Joe Lavorgna, Nathan Bachrach, good to see you both. Thanks for joining us.
Thank you, Bill.
You bet. Now back to Maria for the rest of the program.
Thanks so much, Bill. Up next, we're on the money. Can America be energy independent anytime soon? And where are gas prices headed from here? My conversation with the CEO of one of the largest oil companies in the world is next. Later, how healthcare of the future could lead you back to a better relationship with your doctor. Harnessing technology for cheaper and more affordable medical care. As we take a break, take a look at how the stock market ended the week. Back in a moment. John Watson is chairman and CEO of Chevron, one of the world's largest energy companies. It's a company with billions of dollars on the balance sheet and big ambitions. I spoke to him recently about energy independence, America's natural gas bounty, and investing in the company's future.
We're investing this year some $37 billion as a part of that growth strategy, which will deliver 3.3 million barrels a day, up about 25% from today out in 2017.
So where will you invest particularly? What are the priorities in terms of oil and gas production?
About 25% of our spending is in the United States. The opportunities that have been made available to us over the years have been around the world. So we have big investments in Australia. We have 2 liquefied natural gas projects where us and our competitors are investing some $80 billion. And we expect that those projects will come online in late 2014 and 2016. And then we have deep water developments in the Gulf of Mexico, several big projects, which also will add to production in this country.
Let me ask you about the Gulf of Mexico. I know that after the BP spill, the permitting was very much slow and, not happening. Are you getting the access to the product at this point in the Gulf of Mexico? Are things back to normal?
Well, we've been able to get the permits that we need, but we need to allocate a lot more time for it. There have been new standards that have been put in place, new regulations, many of which we support and work our way through with the regulators. It's been harder for the small companies. The bigger issue for us is access to acreage. 85% of our continental shelf around this country is off limits to development. If we want to grow oil and gas production in this country, we have to make the acreage available both onshore and offshore.
And of course, there's this debate in terms of what the impact is. So let me ask you about that, because hydraulic fracturing or fracking, the biggest story in American energy right now, but there is pressure from environmentalists, pressure from people who say, look, this is not going to be done safely. It will impact our environment. It will impact our wildlife. So first, can it be done? And can it be done safely? And second, how important is it to Chevron?
Well, the reality is, Maria, is that we've been doing fracking for decades in this country. It is really not new technology. It's being deployed in a new manner, but we've fracked over 1 million wells in this country. So it's not new technology. Natural gas that comes from shale that's derived from hydraulic fracturing now makes up over 30% of our natural gas. It isn't an issue. Now, there are environmental practices that need to be followed, whether it's the casing designs that are put in place, making sure we minimize the footprint around some of our facilities, and the industry is taking actions to address those concerns. But fundamentally, it's safe, it's been in use for a long time, and it's a windfall for this country.
I guess the White House recently came out with an environmental report as it relates to the Keystone Pipeline. And they said that it, in fact, is not going to impact the environment negative. What was your thought about that report?
No surprise. We have 2.5 million miles of pipelines in this country. We know that moving oil and gas by pipeline is safe. Again, we have to have the right safeguards in place, but the industry has only improved its standards over time and has performed better and better.
And this is an opportunity to create millions of jobs, isn't that right?
Well, it is. In fact, some estimates would say that there's 1 million jobs over the next 20 years that can be created in this country, and literally trillions of dollars in tax revenue that's available. All we have to do is make acreage available, make sure we keep a reasonable fiscal terms in place, and issue permits on a timely basis.
Everything that you mentioned makes a lot of sense in terms of job creation, in terms of the opportunity that the U.S. has to be an energy exporter. First of all, do you think that's a reality?
Well, I think we are an energy exporter of some products. I think natural gas has a great opportunity for export going forward. As for oil, in general, we're still consuming more than we're able to produce, but we can reduce the amount that we'll be importing. And on a net energy basis, we have the opportunity to be a net exporter over the next 20 years.
And in terms of the gridlock in Washington, how has that impacted?
Well, our industry is a worldwide industry, so we continue to invest. But the uncertainty that we're seeing in Washington does give many people pause, and it slows economic development. And that's not good for my business, but it's not good for others as well.
Let me ask you about your allocation of capital. A lot of people at your analyst meeting recently talked about that big cash load on your balance sheet. $22 billion in cash. In such a low interest rate environment, what are your plans for that money? Will you be increasing the dividend?
Well, our priorities are to increase the dividend as the pattern of future earnings and cash flow permit. We've increased the dividend 25 years in a row, and we certainly have the potential to do the same thing. We do keep a little bit of extra cash on our balance sheet so that we can withstand the ups and downs of the commodity markets.
What would your expectation be for oil and gas prices? I mean, obviously they go up and down, and you're not going to predict. But based on the demand story out there and the supply of oil and gas right now, are oil prices priced right?
Well, oil is truly a worldwide commodity, and I would say the market is fairly well balanced today. Now, we've seen upsets politically that can influence supply, but fundamentally the market is well supplied to meet the needs. Natural gas in this country is a little bit different. Because of the shale gas that we're able to produce and other unconventional gases, we actually have a relative surplus of natural gas. And those import terminals on the West Coast are being turned around for export. Meanwhile, consumers are benefiting with very low prices. So whether you're an industrial customer or a customer for natural gas in the Northeast, you're benefiting from that.
My thanks to John Watson. Up next, we're on the money with a look at one startup providing healthcare benefits to employees of other fast-growing startups. I'll talk to a doctor who prescribes smarter technology for better patient care. And look for us on Facebook /Maria Bartiromo. Back in a moment.
The old model was, you made an appointment and you hope to get in a timely fashion. Most of our patients reach out to us via email. When you get tested, this is what you see. A Sherpa is a guide, someone who will take you on a journey in a safe way. Medicine needs an infusion of something new to make the process of being sick a little easier. It empowers people, and in the broader picture of what we're facing in this country, obesity and diabetes and heart disease. If you make patients advocates for their health sooner, younger, maybe we change the whole picture.
In an era long removed from house calls, tapping into smarter technology may just be what the doctor ordered. Healthcare is ripe for innovation in Startup Nation. New York company Sherpa guides growing companies toward more efficient, less expensive healthcare. That keeps employees healthier. Dr. Jay Parkinson is the founder of the company. And Jay, it is good to have you on the program.
Thank you.
So health insurance, the second biggest expense for companies. We know that after payroll. Tell me how your company Sherpa aims to address that.
Well, oftentimes companies they've just overinsured their employees.
You've got a real relationship with clients, right? Because they're emailing. Tell me how the whole system works.
Well, whenever a company signs up for Sherpa, we send each employee an email saying, "Welcome to Sherpa." They sign up, and they get access 24/7 to one of our doctors. So whenever they're in a bind, they're sick, they're hurt, they just shoot us an email or give us a call, and we'll either try to solve the problem right then and there, or we'll fast track them into exactly who they need.
Whereas in today's world, obviously, it's very difficult. Something happens, very difficult to get to your doctor in an emergency. You may not see the doctor that is the one that you wanted because they may not be on call that weekend.
Sure. We got an email from a patient who was describing classic appendicitis. So we forwarded this email on to our surgeon, Dr. Goldstein. Dr. Goldstein said send him right over. We sent the gentleman over. He was examined, found to have appendicitis. They set him up a room. Within 6 hours, he contacted us and was home, minus an appendix, and it cost about $60,000 less than going to the hospital.
And how is it possible that it's $60,000 less? How are you able to offer these lower prices than the entire healthcare system, which is so expensive?
We have to think of a hospital as sort of like a factory that can build anything. And we like to direct patients to factories that can build just one thing.
So tell me about your career. Earlier in the career, you worked as a primary care doctor who used Google's calendar and texting to talk to patients. That was obviously very smart. How can you leverage consumer adoption of technology to make that patient-seeking care experience more pleasant?
Well, it's just so old school. That's the thing. It's just email and phone. It's just the real innovation is like within a minute, you can get a response from one of our New York City-based doctors.
And why wouldn't hospitals be doing this, do you think? And, doctors today, why wouldn't is it just too much, too many patients to actually have that personal, direct one-on-one?
Doctors only get paid for office visits and procedures. So they're not paid for communication. If they were paid for communication, we'd communicate in whatever way we found best.
Interesting. Very good point. You've spent some of your own money starting this company. How was the capital funding landscape, and what has it been like for you?
Well, for the past 5 years, I've sort of been the, people call me the doctor of the future. So I've been really connected to the VC world. Honestly, it was relatively easy for us. Because most VCs, who don't invest in healthcare want to invest in healthcare because it's something cool, something new, something meaningful.
And do you see more of this on the horizon? Is this space ripe for more funding?
The challenge is sometimes technology is built that doesn't fit into the economic model of healthcare. And it's more of a political problem rather than a technological problem.
Why?
Well, for example, whenever, the feds are saying we'll only pay doctors for office visits and procedures, whenever you build companies based on, messaging to doctors, it's just never going to work unless you create a new business model around it, and that's what we've done.
And what is your business model? How do you make money on this?
Well, we contract with companies, so, it's very easy. We charge about $50 a month per employee. And those employees get unlimited access. And typically, what happens is, whenever we do this type of strategy with the company, we save about $1,000 to $4,000 a year per employee.
That is terrific. Dr. Jay Parkinson, good to have you on the program.
Thank you.
We so appreciate it. We'll be watching the success. Great story. Dr. Jay Parkinson, Sherpa. Up next, we'll take a look at the news this upcoming week that will have an impact on the money, and then the world's biggest hamburger chain expanding its menu. You'll never guess which vegetable is making its debut. And it's no April Fool. Stay with us. For more on the money, check out the website otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. On Monday, the Institute for Supply Management will release the monthly manufacturing index. On Tuesday, we'll get total auto sales for the month of March. And then on Friday, the big kahuna of the economic reports, we'll get the unemployment rate and the number of jobs lost or gained in the month of March when the Labor Department reports that monthly jobs report. And finally today, McDonald's fight for market share. The fast food chain continues to roll out new dishes to attract health-conscious diners. As of Monday, McDonald's will offer the Chicken McWrap. It is similar to snack wraps, but this sandwich will come with cucumbers. Yes, cucumbers. The fast food chain says this will mark the first time the vegetable will be part of its core menu. The company hopes chicken and cucumbers is a recipe for success. That'll do it for us for today. Thank you so much for joining me. My guest next week, A.G. Lafley, former chairman and CEO of Procter & Gamble. Each week, keep it right here where we are on the money. Have a great week, everybody. I'll see you again next weekend.
Ross needs an auditor who knows the industry as well as he does. For Brian, it's whether he can call the partner at midnight.
So?
They both came up with the same name, BDO.
People who know BDO.